In this one question of debentures, we'll practically learn majority of concept of debentures. Let us start this question. Following transactions pertains to unlisted company X Limited not being PFI or NBFC. So all the rules of DRR and DRR investment will be applicable to this type of company. Normally, if it is an unlisted company, these rules are applicable to them. 1st April 2020. So transaction starts from 1st April 2020. X Limited issued 10,000 12% debentures, 100 each at a premium of 20%. Underwriter was hired at 2% commission. 10th April 2020, application was received for 8,000 debentures. So issued were 10,000, but application were received only for 8,000 debentures. But we have hired an underwriter, so remaining debentures will be purchased by that underwriter. 1st May 2020, allotment made of all the debentures, underwriting commission recorded. Record date are 30th September and 31st December. 1st April 2021, 20% of each debentures were converted into equity shares. So this point is of conversion. 31st March 2021, rupees 1,000 was transferred to DRR. This concept is of DRR. 1st May 2021, the company purchased its own debentures. So the concept of own debenture is also included in this question. Requisite DRR was created. Company purchased again its own debentures, but for immediate cancellation. 31st March 2023, all interest were duly received and paid. All outstanding debentures were redeemed at premium of 10%. So the concept of redemption will also be covered. Parts necessary journal entries and prepare necessary ledger accounts. Company has sufficient bank balance and reserves. So as far as bank account is concerned, profit and loss account is concerned, we can just prepare extract because we don't know other information. We can just prepare extract. But we'll be passing journal entries for all 3 years, 2021, 21-22 and 22-23. So let us start with journal entry and also start preparation of ledger accounts for the year 2021. So this is year 2021. Let us pass journal entry. X Limited issued 10,000 debentures, 12% debentures, 100 each at a premium of 20%. Underwriter was hired at 2% commission. Application were received for 8,000 debentures. So 10th April is the first date when journal entry will be passed. Because we have received actual money, real account at bank account is affected. Application were received for 8,000 debentures. So bank account debit to debenture application. 8,000 into 120 rupees. This is 9,60,000 rupees. In examination, you'll have to write down narration being application money received. In next entry, debentures of 10,000 will be allotted. 8,000 to public and 2,000 to underwriter. So second journal entry will go like this. Debenture application being a temporary account, this account was credited by 9,60,000. So it will be debited by 9,60,000. We need to close it. But remaining 2,000 shares, 2,000 debentures at the rate of 120, that is 2,40,000 rupees, will be purchased by underwriters. They'll not give immediate cash because they need to deduct their underwriting commission. So we'll be passing that journal entry also. To 12% debentures. This is 10,000 debentures, 8,000 purchased by public and 2,000 by underwriter. So 10 lakhs rupees. To security premium account, 2 lakh rupees. Let us prepare necessary account. We will be preparing bank account, underwriter account. Debenture application is a temporary account, so I am not preparing a separate account for it. And 12% debenture. Security premium will be shown in balance sheet, liability side. So bank account, underwriter's account and 12% debentures. bank account, and this is underwriter account. So big is not required, so small underwriter account. And even 12% debentures. Let me prepare over here. 12% debenture. So how to post this journal entry? Bank account is debited by 9,60,000. Which is 10th April 2020. Amount is 9,60,000. Understand, this is just an extract. We are not passing other entries which are related to bank account in the year 2021. Underwriter's account is debited by 2,40,000. And 12% debentures will be credited by 10 lakhs. So this is posting done of first three basic journal entries. Let us now go to underwriter. Underwriter will now charge commission. We have allotted this particular shares on 1st May 2020. So this is 1/5/2020 and this was 10th April 2020. Now let us charge underwriting commission. Underwriter will charge commission. Underwriting commission will be expenditure for the company, so will be debited. To bank, no, because they have not paid us, we will also not pay them directly. Last account will be settled to underwriters. How much underwriting commission will be charged? Underwritten were 10,000 debentures of the face value rupees 100 and underwriting commission of 2% was decided. This will be 20,000 rupees. Underwriting commission will be closed in profit and loss account. Journal entry passed will be P&L account debit to underwriting commission. This will be passed on 31st March 2021. That is on the last day of the year. So let me close it in P&L account. Let me draw even a profit and loss account extract. This is for 2021 to underwriting, which will be 20,000 rupees. To underwriters, 20,000 rupees credit. On the same date, which is 1 May 2020, 20,000. Now, if you will see underwriter account, payable by underwriters are 2,40,000 minus 20,000, that is 2,20,000. We will be receiving it from underwriter, say assume it is on 1st May. By what is the journal entry passed? Bank account debit to underwriter and underwriter account will be closed. There's a settlement made with underwriter by receiving 2,20,000. Bank account we have debited by 2,20,000. Underwriter account will be credited by 2,20,000. Bank account will be debited by 2,20,000. 1/5/2020 to underwriter. So we have done settlement with underwriter, we have paid them commission. Record date 30th September and 31st March. Please understand, record dates are the dates when company will pay debenture holders to its debenture holders. Whoever so are debenture holders in the register of the company, they will be paid interest at the rate of 6% in September and 6% in March. So per annum, they will be paid 12% interest. Let us go to 30th September. And as it is the first case, it will be interesting. 30th September 2020. You will have to pay debenture interest, yes. So debenture interest account debit to bank. How much is relevant? How many outstanding debentures are there? 10,000. Now underwriters are as good as debenture holders. What is the face value? 100 rupees. What is per annum rate? 12%. Normally 6 months interest should be given, but the allotment was made on 1st May. So April interest will not be given normally. It will be written in debenture issue document from when the interest will start, and normally it is the date of allotment. And so debenture holders this time will not be receiving April's interest. So it will be 5 divided by 12, which will be 50,000 rupees. This will be journal entry. Debenture interest will be closed in P&L account on 31st March. This will be 31st March. This will be 31st March. To debenture interest. How much? Bank account by debenture interest. The date is 30th September. Everything in P&L account is closed on 31st March. This is when the debenture interest is paid. So every time we will remember these two dates, 30th September and 31st March. On 1st January 2021, 20% of each debentures were converted into equity shares. Debentures were converted at a premium of 10%, and each equity shares for the purpose of conversion were valued at rupees 21. Now let me draw a working note for the same. There are, say this 10,000 debentures. Which are issued by the company. The face value of each debenture is rupees 100. Please understand, 20% of debentures are not converted into equity shares. This is 20%. Those are not converted into equity shares. Each of the debentures, 20% will be converted into equity shares. See, what does this mean is, now there will be 10,000 debentures, but the face value of each debenture will be rupees 80. So where this 20 has gone, they are converted into equity shares. This is converted into equity shares. And what will be journal entry for conversion is very easy. First, debentures, 20% debentures are converted practically, or 10,000 debenture into 20 rupees is converted. What is converted? 10,000 debentures, 20 rupees face value is converted. So that will be debited. We need to cancel that debentures. Now they are equity shares. And this is done on 1st January 2020, 1st January 2021. So 12% debenture account debit, which is a 10,000 debentures into 20 rupees, which is 2 lakh rupees. This will be converted into equity shares to equity share capital, but they will not be converted at 10 rupees. They will be converted at 21 rupees. So to security. Now try to understand how much money we need to give to debenture holders for the purpose of this conversion is 2 lakh rupees. Now if I want to give you 2 lakh rupees and if I don't pay you cash or bank, then I will give you in something in kind. Suppose I am giving you this pen. Then I will have to value this pen. Say this pen is valued at 10 rupees. Then I will be giving you 20,000 this type of pen. If this pen is valued at 100 rupees, I will be giving you only 2,000 such pens. In this case, I am not giving you pen. I am giving you equity shares. I need to give you value of rupees 2 lakhs. If I give you one equity share, it is as good as I am giving you 21 rupees. It is said in the question. Each equity share for the purpose of conversion was valued at rupees 21. So how many equity shares I should give you so that I pay you 2 lakh rupees? Which will be a simple cross multiplication. 2 lakh divided by 21. 9524. At the rate of rupees 21, which is having face value of 10 rupees. This many shares will be issued. Again do it. 2 lakh divided by 21. 9524. Yes. 2 equity share capital 9524 into 10, that is 95,240. Security premium will be 9524 multiplied by 11 because total is 21. 9524 into 11, which is 1,04,760. Total will be 1,04,760 plus 95,240, which is 2 lakh rupees. So our journal entry is tallied. Also please understand, this is 1st January. The record date was 30th September. So October, November and December on this debentures or this portion of debenture is pending. Which company might pay immediately or will be paying it on 31st March. We will assume they are paying it on 31st March. This will go in balance sheet. Equity share capital again will go in balance sheet. We are not preparing a separate ledger account. 12% debentures are debited by 2 lakh rupees. Which happens on 1st January 20. So we have even posted this particular journal entry. This is journal entry for conversion. On 31st March 2021, rupees 1,000 was transferred to debenture redemption reserve. Before that, let us calculate, because it is 31st March, company will have to pay the interest, debenture interest account debit, which ultimately will be closed in P&L account, to bank. This is interesting, how much interest will be paid. Before or say on 1st October 2020, there were 10,000 debentures of rupees 100 each, which were there 12% into 3 divided by 12, because they were for the period of October, November and December. From 1st January, there were 10,000 debentures, but their face value was 80 rupees into 12%. And this type of debenture lasted January, February and March. So that is also for 3 months. And total of this interest will be debenture interest. Let us find it out. 10,000 into 100 into 12% into 3 divided by 12, which is 30,000. 10,000 into 80 into 3%, which is 24,000, and this total will be 54,000. So debenture interest calculation is somewhat relevant, somewhat good as far as this case is concerned. Debenture interest will be debited to profit and loss account by passing a journal entry P&L account debit to debenture interest. So P&L account 31st March 2020 to debenture interest 54,000. This was 30th September 2020 and this is 31st March 2021. Debenture interest 54,000. To bank 54,000. So bank account will be credited by 54,000. Next, again is on 31st March 2020. Rupees 1,000 DRR is created. To create any reserve, there is a universal journal entry, profit and loss or general reserve account debit to that particular reserve. Normally it is P&L account debit to DRR, a universal journal entry to create DRR, that is debenture redemption reserve. So I'll pass the journal entry on 31st March for rupees 1,000. Same journal entry, P&L account debit to DRR 1,000 rupees. DRR account I'll be creating. P&L account I'm already having. P&L account debit 31st March 2021 to DRR 1,000 rupees. I will prepare one more account which is DR 31st March 2021 by P&L account 1,000 rupees. And we have closed books of accounts for the year 2021. Let us also close the accounts. We have passed the journal entry for 2021. Bank account is an extract, so will not be actually closing it, but we will keep it as it is. Debenture account will be closed. Balance is 8 lakh rupees, 31st March 2021 to balance 8 lakh rupees. This will be closed by balance 1/4/2021 of 8 lakh rupees. P&L account again is an extract. DRR account we should close underwriter account is already closed because we have settled accounts with underwriters. And we can go to another year, that is 21-22. What is first happening in 21-22? 1st May 2021, company purchased its own 1000 debentures at 78 rupees per debenture cum interest. So first will be 1st May 2021. What company is doing? Out of 10,000 debentures of rupees 80 each outstanding, company is purchasing 2,000 of its own debentures. Whenever you are purchasing or doing any investment, it is as good as you are doing investment account, and the journal entry for the same is always same. But understand what we are purchasing in this case is, we are purchasing 2,000 debentures at the rate of 78, the face value of which is 80 rupees. This will be 1,56,000. But this figure is including interest. So what is the interest? Again, understand, the seller will say, I am selling you this debenture on 1st May. I have got my last interest on 31st March. When he has got his last interest, 31st March 21. When he is selling you this debenture, 1st May 21. So what about this interest? When the company will declare interest on 30th September 2021, the person is not having this debenture. He has already sold it on 1st May 2021. So he will ask for this interest. And what will be the interest? 2000 into 80 into 12% into 1 divided by 12. This will be 1,600 rupees. This interest, he is saying you purchased my debenture at the rate of rupees 78, in which I have considered this 1,600 rupees. So I will not charge just this extra. It is cum interest. You can go to investment chapter and learn this. Remaining will be 1,54,400. We will pay him for debentures, our own debentures, and we will pay him 1,600 rupees for interest. Totally, we will be paying him 1,56,000 rupees. So let us pass the journal entry for investment in own debentures. Investment in own debenture account debit. How much we are paying for debenture? 1,54,400. Interest on own debenture account debit. 1,600 rupees. To bank 1,50,000. In examination, as I told you, you need to write down the narration. For investment account, we are having a separate format. We'll be doing this. Interest on own debentures will be an interest column in that particular account. To bank we have already prepared, which is an extract of the bank. So investment in 12% debentures looks like this. Face value interest rupees, face value interest and rupees. This is our cost. The date on which you have purchased your own debentures is 1/5/2021. How many? 2,000 of a face value rupees 80. Number of debentures 2,000. How much interest we have paid? 1,600, and this was 1,54,400 for. This both were debited. This is interest on our own debentures. 1600 and cost was 1,54,400. Bank should be credited 1,56,000 total. We have purchased our own debentures, come interest, we have recorded it even in our books of accounts. Next is 31st March 2022. So there is no other transaction except this transaction as far as this year is concerned, but we'll have to take care of 30th September. On 30th September, the company will be paying interest. How much interest it will pay? Debenture interest account debit. Please understand how much will be debenture interest account. There are still 8,000 debentures outstanding of rupees 80 face value. You need to pay 12% interest for the period of 6 months, which will be 38,400. But surprisingly, you will not have to pay 38,400. Why? Because there will be interest on own debentures. How much debentures you are holding? You will not have to pay to yourself. You are holding 2,000 debentures of 80 rupees, 12% into 6 divided by 12, which is 2,000 into 80 into 6%, which is 9,600. Remaining is holded by public. So 6,000 is holded by public. We are making some mistake because those are 2,000 debentures. Yes. There is a printing mistake. These are 2,000 debentures. So interest on own debentures is 9,600. This will be 6,000 into 80 into 12% into 6 divided by 12, which will be 28,800. So understand, you just need to pay 28,800 rupees even if total payable was 38,400, because you have earned interest on your own debentures of 9,600. Debenture interest account debit will normally be closed in P&L account 38,400. And it will normally be closed in on 31st March. To bank 28,800. Which is 28,800, and interest on own debentures is 9,600. So see, if you are making investment, you will be getting money on record date. Here you have purchased your own debentures, so record date will be also your own, and the interest under consideration is 9,600. This will not be received, but this will not be our debenture interest cash outflow. This journal entry is also duly recorded. And let us go to next one. There is a correction. This is not 1000 debentures. We have purchased 2000 of our own debentures. 31st March 2022. Own debentures were cancelled after recording the interest. So again, the next record date is 31st March 2022, on which similar type of journal entry will be passed. Debenture interest account debit to bank to interest on own debentures. Figure will also remain same because there has been no change from 30th September to 31st March. Debenture interest will be closed in P&L account. Bank will be credited by 28,800 and interest of 9,600 is own debentures interest. On record date, that is 31st March, we have again recorded it. Own debentures were cancelled. We are having 2000 of rupees 80 each our own debentures, which we want to cancel on 31st March. First of all, we will cancel that liability. 12% debenture account debit. How many debenture we want to cancel? 2000 with face value of 80. Why it will be debited by 80? Because it is credited by 80, so it should be debited by 80, which is 1,60,000. 2. Investment in own debentures. Again, this was recorded as a debit balance. Now it will be recorded as a credit with the same figure so that that account is closed. 1,54,400. Now it is not tallied, there is a profit, it is a capital profit, should be transferred to capital reserve. 1,54,400 minus 1,60,000. 5,600. Because 80 rupees debentures was purchased by you at the rate of 78. This is the difference which is normally your profit. It is a capital profit, should be transferred to capital reserve. 12% debenture account debit. $1,60,000. This is on 31st March. Investment in own debenture account debit 1,54,400 and capital reserve account will be credited. Investment in own debentures 1,54,400. These are 2000 debentures. Here, this is an interest column. We will not be transferring that capital reserve amount. So this account will close. Interest balancing figure will be transferred to profit and loss account. 9,600, 9,600 minus 1,600. 17,000 will be transferred to P&L account as on 31st March 22. And understand, This own debenture account interest can also be understood. We have purchased it on 1/5/2021. We have cancelled it on 31st March 2022. So we have kept it for 11 months. So this interest, which will be P&L credit will be 17,600. Own debenture interest. And this will be over 2000 debentures of 80 rupees, a 12% is interest rate into 11 divided by 12. Logically, this should be the answer. 17,600, which is logically shown over here. Of course, capital reserve, we are not preparing a balance sheet. Capital reserve will be transferred because capital reserve, there is a capital profit of 5,600. This is year 21-22. We need to close necessary accounts. This is just a bank account extract, so we are not closing it. This should be closed. This will be 6,40,000 will be our balance as on 31st March 22. On 1st April 22, there will be opening balance of 6,40,000. Let us not close it because there is one more entry which is pending. 31st March 2022. Requisite DRR was created and requisite DRR investment was made in rupees 100 10% government bond at par. Record date 30th September and 31st March. All debentures are redeemable on 31st March 2023. Now what does Companies Act say is very simple. If you are on the last day of the previous year of redemption, then 10% of your outstanding debentures should be transferred to DRR. Now what are your outstanding debentures right now? It is 6,40,000 multiplied by 10% is 64,000. What is balance in your DRR? 1,000. So 63,000 will be transferred on 31st March 2022 in reserve account, the DRR, debenture redemption reserve. So P&L account will be debited by 2 DRR 60. Also it says you should be having on the last day of the previous year of redemption, you should be having 15% DRR investment for the debentures which are redeemable in next year. Now all of the debentures are redeemable in next year. It is given in the question, all debentures are redeemable on 31st March 2023. Outstanding debentures are 6,40,000. So 6,40,000 into 15% should be 96,000 should be DRR investment. And it is said you have purchased bond of government. Rupees 100, 10% government bond at par. You have purchased at par 96,000 rupees because that is what is requisite. 6,40,000 into 15%. 96,000. They were purchased at par of rupees 100. So there are 960 bonds. Interest will be 0 because last date was 31st March. This is 1,422. Opening balance or closing balance of the last year. And we have done sufficient provision of DRR and DRR investment. 30th, the record date are 30th September, 31st March. All debentures are redeemable as on 31st March 2023. All right. So whenever there is a record date, we will now also have to see for our investment what are our record dates. We can close previous year, that is 21-22. This is P&L account. I will not be closing it. Debenture account already I have closed. DRR total will be 64,000, which is 10% of outstanding debentures, which is balance as on 31st March 22. On 1st April 22, opening balance will be 64,000 in DRR account. Underwriter account is closed. Investment in own debentures, there is no point. And government bond, we have directly written opening balance. You could have written last year closing balance and then again transferred it to opening balance. So this is done. Finally, 21-22 is over. Let us go to 22-23. On 1st June 2022, company purchased its own 2000 debentures for immediate cancellation at the rate of rupees 85 x interest. So the date is 1st June 2022. First June 2022. How many debentures are purchased? 2000 debentures are purchased at the rate of 85. This will be 1,70,000 rupees. And this is not inclusive of interest. So this is purely for debentures. Will we have to pay for interest? Yes. Why? Because this is done on 1st June. The last record date for our debentures we are knowing is 31st March. So what about April and May interest for the seller? Seller will ask for this interest. So seller will ask for 2000 debentures of rupees 80 each. He will ask for 2 months interest. That will be paid separately. This is just working note which I have done, which will be 2000 into 80 into 2%, which is 3,200. What will be journal entry? Investment in own debenture account debit. How much? 1,70,000 rupees, which is not inclusive of interest. Interest on own debenture account debit 3,200. 2. Bank 1,73,000. Let us again go to relevant account. Investment in own debentures 1,70,000. And interest portion is 3,200. These are again 2000 number of debentures. Now, these debentures are immediately cancelled. If they are immediately cancelled, let us first pass entry into bank, which is 1,73,200. On 1st June itself, we are cancelling this 2000 debentures. We have purchased it for immediate cancellation. 12% debenture account debit. How many debenture we want to cancel? 2000. What is credit effect given at? Face value, which is 80. So to cancel it, we need to debit it. 1,60,000. To investment in own debenture, which should be credited by 1,70,000. There is a loss of 10,000. If there is a loss, immediate can be always the transferred to profit and loss account. Our own debentures which we have purchased, we will immediately cancel it. P&L account debit 10,000. P&L we have just prepared it for extract. 12% debenture account debit 1,60,000. To investment in own debentures 1,70,000. 2,000 debentures, no interest because it is on same date, 1 lakh. P&L account of course will be debited. This will be transferred to profit and loss account. Again debit side to P&L account 3,200. And this is when the own debentures are purchased for immediate cancellation. Company purchases own debentures at the rate of ₹85, X interest. All right. On 31st March 2023, before that, the date will be 30th September. Date is 30th September 22. We will be receiving and paying interest on how many debentures? 10,000 debentures were originally there. 2,000 debentures were cancelled. 2,000 debentures were cancelled in current year. So now there are only debenture interest account debit to bank. There are only 6,000 debentures of 80 rupees into 6 divided by 12. 28,000. Again, debenture interest will be closed in P&L account. Bank will be credited by 28,800. On 30th September, we have duly paid the interest. Let us go to 31st March. Let us first receive the interest. Will we receive the interest? Yes, on 30th September also will receive the interest. Bank account debit to interest on investment. Bank account debit, how much? We are having 10% government bonds, 10% is per annum, so 5% on 9,600. 96,000 is the face value also into 5%, which is 4,800 rupees will receive from government bond as interest. Bank account debit 4,800. Where this should be transferred? It can be transferred to profit and loss account. Also, there is a rule that if there is a debenture redemption reserve and any income is generated from the investment, then it should be transferred to DRR. So both options are valid, both options are correct, both options are will give you full marks. You may transfer this 1000 rupees to this 4800 rupees on credit side of DRR. You may transfer it to PNL account. I am transferring it to PNL account. Why? Because I am having sufficient DRR for the next year as far as legal criteria is concerned. Let us go to 31st March. Again, we'll be receiving interest. Bank account debit to interest, same amount, 4800. And this 4800, I'll transfer it to PNL account. Again, as I told you, it can be always transferred to DRR account instead of PNL account. On 31st March, you will have to pay debenture interest. Now nothing is happening. No, there are no debentures which are cancelled, and so the interest will remain same. Debenture interest account debit to bank. Debenture interest will always be closed in PNL account. All right. So on 31st March, all interest were duly received. All outstanding debentures were redeemed at a premium of 10%. Before redeeming it, understand, we will have to sell all our investment. Whatever we have purchased as our own investment, they are already cancelled. They are already cancelled immediately. In previous case, it was cancelled at the end of the year. But this 10% government bond, nothing is given. So by bank, interest we have directly closed in PNL account. It may be written even over here. And then close to PNL account. 4800. And then I am assuming they are sold at face value. What is the journal entry when our investment are sold? A simple journal entry. Bank account debit to 10% government bond. This is what I was saying. 31st March in previous year, we have not passed 10% government bond account debit to bank of 96,000. This we should have passed, but we have directly written it in ledger account. So in ledger account we have done it. In bank account we might not have written it 96,000. So 96,000 was by 10% in previous year. And this year cancel or the selling of bond account is the correct journal entry. Bank account debit 96,000. There is no profit or loss because it was dealt at face value. Also it was sold at face value. Bank account debit 96,000. And 10% government bond 96,000 credited. Thus we have already transferred it to PNL account 4,800 and 4,800. We have already transferred it on credit side of PNL account. So this is also the entry which is done. DRR investment, 10% government bond as well as our own investment are sold. 31st March, debentures all will be redeemed. Right now, there are 12% debentures which are outstanding only 6,000 of rupees 80, which is 4,80,000. Redemption premium will be, I think they are redeemed at 10% premium. 48,000 to debenture holders, and ultimately debenture holders will be paid to debenture holders to bank. So I can pass this journal entry 4,80,000 plus 40, 5,28,000. 12% debenture account debit 4,80,000. Redemption premium should normally be closed in P&L account 48,000. To bank 5,28,000. Now, this is a temporary account. All the journal entries are over. 12% debenture 6,40,000. 6,40,000 will be closed. P&L is just a extract, so no need to close it. DRR, there is a balance of 64,000. Now all the debentures are redeemed. It was created from profit and loss account. So now it will be even closed in profit and loss account. So now this specific reserve is converted into general reserve. Now this can be used for declaration of dividend. So P&L account will be credited by 64,000. When this was created, a general reserve is converted into specific reserve. When it is closed, the specific reserve will be converted into general reserve. Even DRR will be closed. Underwriter is already closed. These two accounts are closed. This is how we solve a question of debentures, and please understand majority of the concept starting from issue, underwriting, conversion, own debenture interest, DRR investment, DRR in case of listed company, and debenture redemption at premium is covered in this particular question.